Coming up on Market to Market. The weekly journal of rural America kicks off its 40th season at the Iowa State Fair. We'll look back at the early years and analyze current trends in the markets with a blue ribbon panel of experts. Next.
Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it. This is a special edition of Market to Market from the Penningroth Media Center at the Iowa State Fair. The weekly journal of rural America kicks off its 40th season. Here is your host, Mike Pearson.
Thank you. Welcome to a very special edition of Market to Market. We're thrilled to kick off our 40th season with a live audience here at the Iowa State Fair. We've assembled a terrific panel of analysts, and we'll get to them in just a moment. But before we begin, we want to look back at some of the sights and sounds from the early years of the program.
Farm Digest with Chet Randolph.
Hello, I'm Chet Randolph. Welcome to the first edition of Farm Digest. There's an old saying that the only things certain in life are death and taxes. Well, in election year, that's not always the case.
This is what the farmer put in, the heel and one slice. This is what somebody else put in that loaf of bread. It cost more in this town this morning to deliver that loaf of bread from the bakery door to the supermarket shelf than it cost to put the wheat in it.
And remember, the first week in January, we'll start the new year with a new name, Market to Market. Until then, I'm Chet Randolph. Thanks for joining us and have a good holiday.
The 17 million tons of grain ordered by the Soviet Union, in excess of that amount which we are committed to sell, will not be delivered. I am determined to minimize any adverse impact on the American farmer from this action.
Our grain exports this year will exceed last year's business by 10 million tons without the Russians. We don't need them. They're more trouble than they're worth.
We are prepared to announce a massive acreage reduction program. And I think, as most of you are aware, setting land aside is not my cup of tea. One must understand the nature of American farmers to fully realize the significance of these figures.
No sale! No way! No sale! No sale! No way! No sale! No way!
You know, George Washington said that agriculture was our most important industry. Thomas Jefferson said that our tillers of the soil were our most important citizens and the backbone of our whole democratic republic. And then David Stockman comes along and says, unlike Washington and Jefferson and Lincoln, farm bankruptcies are needed. Forget David Stockman. Forget David Stockman. Return of it.
I thought one day maybe I'd get rich and have my own farm, and then I'd have people working for me. And finally that happened, and last year I lost $800,000 feeding cattle.
And there stood Leon on his land with a shotgun in his hand. His eyes were narrowed beneath the brim of his hat. He said, I've worked hard on this land as a boy and as a man, and I'll lose it now to no damn bureaucrat. We call on the governor, we call on Governor Branstad and the legislature to declare to Congress that the 85 Farm Bill is totally inadequate.
Governor, upon how well you listen to our people and respond will decide on whether people are going to live or die.
Now all of a sudden we've got Silicon Valley in agriculture. We've got a big change.
And to have more government, I think, is like throwing a drowning man another bucket of water. That isn't what you need. We simply need to get to higher net farm income through the market system and get our checks from what we sell, not from the government.
Hello, I'm Mark Pearson. The Federal Reserve this week reported signs of life in the U.S. economy.
bringing in more corporate capital. It's going to be a very changed nature of rural communities. It's going to start meaning that the primary returns to agriculture, which have traditionally been in land ownership, start flowing away from the people that work on the farm.
Wow, there were some big developments during the early years of the program. But one thing hasn't changed. Market to Market continues to feature the best commodity market analysts in the business. And joining me now are 4 of those experts. Sue Martin.
Thank you, Mike.
Elaine Cubb.
Thanks for having me.
Virgil Robinson.
Thanks, Mike.
And Walt Hackney.
Thank you, Mike.
Folks, thanks for taking the time to join us here at the Iowa State Fair. Now, we have some questions from our live audience and also from our social media sites. But Sue, let's start with you. We had the USDA report come out on Tuesday. Talk to us a little bit about how that affected the corn trade this week.
Well, I think the trade has dialed in a yield of 170, and we're hearing yields as high as 173. Even Landworth is at 174.3. So the expectations of the crop are quite large or quite huge. The USDA didn't ratchet up that much. They came out with a new record yield of 167.4, but that was a little bit of a surprise to the trade. They were expecting more, and of course the bearish traders will try to downplay that and say that the USDA has underestimated the crop. Still, this is as of August 1st. You look at crop condition ratings, and that yield probably will still come higher with time. Next week is the Pro Farmer Tour, and I think that the market, with the help of a positive USDA report, also lowering global supplies by just a touch, still going in the right direction for agriculture, I think that that was helpful to solidify a low here for the moment. And I think with the Pro Farmer Tour coming, the trade is thinking, let's just step back from our short positions and let's see what happens here. What do they see? Is Illinois' crop as good as they say?
All right. Now, Elaine, as we talk about new crop corn, with this recent rally we've had for producers out there who maybe thought they'd sold enough before the yields really started coming in big, is this a rally you look to make some sales on, or do you think it could extend a little farther?
I don't think that this is probably the time to be making sales, to be catching up on sales of corn if you don't have enough sold already. I think that the best chances are probably farther down the line. If we get some sort of a weather event internationally, there may still be a chance for a rally perhaps in the fall. But these prices are not terribly exciting, particularly when you start factoring in the basis, particularly up in the northern, northwest part of the Corn Belt. There's some really ugly basis right now due to the rail situation. So hopefully if that ever gets, if those backlogs ever get worked through by the rail companies, you might get some better opportunities just by waiting.
Well, now, and let's talk about those rail backlogs for a second, because that's been an ongoing issue since early spring into winter. Are they getting any better? There's been some federal requirements to the railroads to hopefully expedite that. Is it beginning to have an impact? Have you heard?
They are getting better. The railroads are certainly communicating well. They're trying, obviously, I think, but they're still back. I mean, you've got a backlog of a week in some cases, up to a month, some places in North Dakota, and it's not going to be fixed by harvest. So one way or the other, we're talking about very large piles and backlogs and dwell times and waiting for rail cars.
All right, well, now let's talk about the global demand situation as we look to the future on this new crop corn. Virgil, what do you see happening? Is this lower price going to spur sufficient demand to create a rally here into this next year, do you think?
It's going to build the demand base, Mike. And before I forget, regarding the crop size here, initially now the USDA has gone through stock count and row width. They've not addressed ear length, ear weight, number of rows, and kernels. So that's forthcoming. The other thing that may be of interest to the group is the FSA today rolled out their first prevent plant conversation. And clearly there is some prevent plant, not to the extent we had a year ago, but it is likely, bottom line, in October, there'll be some modest adjustments to the planted corn acreage number as well as the planted soybean acreage number. Global corn production, global wheat production, global soybean production, global rice production, all forecast to be record large, Mike. So as we visit about supply, at least at face value, there is not an overwhelming concern. Interestingly enough, I spent a little time in a couple of country terminals this week, and I was surprised at the number of trucks in the lineup delivering old crop grain. Okay, so we have an issue here approaching us regarding storage and transportation that's not going to disappear overnight. Warren's railroads made some progress. The Canadian National, not so much. Okay, so we have lots of work to do with regards to railways, roadways, and waterways.
All right.
But globally, at present, no concern about supply. Some of the Russian crop, some of the European wheat crop is subpar and likely to find its way into the feed channels.
Okay. Now, you mentioned old crop. There's still a lot of producers that I've spoken with here over the past couple of weeks that are sitting on at least some old crop corn. They're getting ready to clear out the bins. This little rally we've been on here, do you look to unload some old crop, Sue? What do you think?
Well, I think that you know, we've had such a tremendous sell-off here, and the market seasonally tends to, in the last half of August, to lift a little bit. So we're getting a chance at that. Corn had a higher weekly close this week, so that's a positive. Actually, I think it's a key reversal week too. And so that should portend a little better. The problem might be that this market can be more sideways than higher. And markets have a tendency to, you know, just sort of contract that way, or how do I want to say it, just sort of correct that way. They move sideways instead of giving us the price appreciation we want to see. I think that the one thing we have to keep in mind is the cure for cheap prices is cheap prices. Global demand's going to be quite good. And I think that when you look around, one of the bigger problems, like Virgil mentioned, is this feed wheat problem over in France and Germany that's going to probably allow them to feed that and sell corn. So we're going to have a little competition there. The one thing in the back of my mind that I wonder about is in Russia, and especially in the Ukraine. I sometimes wonder if they aren't touting bigger crops than they really have because they need money. And if they need money, they certainly aren't going to go to their banker and say, well, we're not going to have this, or we aren't going to have a lot of collateral. So I just sort of wonder if the production's actually going to be as good as they say. And you've got China dealing with some drought, in some areas, some of the worst drought they've had in 40 years.
That's true. Now, you mentioned wheat a couple of times. Elaine, let's talk to you as our South Dakotan here. Talk to us a little about what we're seeing in the wheat market. Harvest is just about wrapped up. How have things shaken out?
The spring wheat crop in South Dakota is so beautiful, you would not believe. It's 80% is good or very good, and I think maybe 1% is poor. It's incredible. It's the most beautiful crop you've ever seen, and that's not, of course, very bullish to prices. And it wouldn't just have to be a spring wheat argument either. Globally, as Virgil and Sue have both mentioned, there is no shortage of feed grain globally, and Australia is even starting to expect above average yields given their moisture situation. So there's really no bullish stories for wheat. In fact, if you look even wheat compared to corn as a feed value, wheat would be overpriced, just statistically compared to what its average relationship to corn should be. So the Chicago feed wheat market, I could see falling down to $5, $5.03, which would be piercing new range on the chart, but it wouldn't take very much. Another 30, 40 cent drop, and I think you'd probably start to find some support for wheat.
So that being said, this might be a decent opportunity to make some sales if you haven't had a lot of sales so far.
Right, and if you don't want to put it all in a bin and use up your bin space for the oncoming corn and soybean crops, which also look good in most of the wheat areas, other than Kansas, of course.
All right. Well, now let's talk soybeans. One of the trends we've seen throughout this year, and the market hasn't put much of an impact on it, is the bizarre weather. We've had abnormally cold weather all spring and into this summer, and now in talking to producers out there, we're beginning to hear concerns on the farmer side about an early frost. Virgil, have you heard any concern on the market side about an early frost, or where do you see this new crop soybean market headed?
I've not heard a lot about frost, Mike, but I mean, it's always an issue, and there'll be some areas where the state of the crop is not quite as advanced as others, and it's predominantly, I think, in the Dakotas, North Dakota, parts of Minnesota, parts of Wisconsin. What was your other question, Mike? I'm sorry.
As we're talking new crop soybean prices, how do they look? Where do you see them going? I mean, in terms of demand and both crop supply, as we saw from the USDA's report.
Well, the forecast is for record soybean production here in the U.S., which is being followed by a record crop in South America. Now, the new crop soybean new crop ratio, Mike, as we go to fields, the South Americans begin to plant a crop. The ratio is clearly tilted towards additional soybeans, and the economics favor soybeans. So it is conceivable, given that set of circumstances, that in the spring of 2015, the supply of soybeans in the Western Hemisphere will be the largest it's ever been. So let's stop and define that as a risk, okay? That's the risk. The prospect of a price recovery, an appreciable recovery, would be predicated, I think, solely by weather. And that's, normally not a very good marketing strategy. So if you've sold nothing to this point, sell something. You have a risk here. And the risk could be as much as $1 or $2 below prevailing values. Now, your balance sheets are strong. They're the best they've been in 50 years. So there are a certain number of folks who have a high tolerance for risk. And for those folks, I really don't have any advice. Right. They're fine.
Sue, do you have anything to add?
Well, I think, yes, we are looking at a huge production in beans this year. But the one thing we have to keep in mind is that the talk is that Brazil's going to raise, CONAB talked, or Solaris, I guess it was, talked about 91 million metric tons. But, you've got others out there like Ag Rural that are talking 94 million metric tons, and they're pretty astute and usually pretty accurate. That said, one thing that nobody's really talking about in Brazil is just how dry they are. Brazil is seeing a very dry situation. They went through the worst drought in more than 50 years, and the coffee crop was horrendously affected. But the one thing we're also seeing is that they're very dry at an abnormal time when they normally would not be. And the Cerrado area is an area where they do produce a lot of soybeans. And unfortunately, they're very dry right now. So they're going into their planting season in September. And it'll be interesting to see just how they continue to flow with weather. Because maybe, just maybe, they don't get that big crop. And they started off, they went up to as high as 93 million metric ton estimates this past season, and they ended up with, well, the USDA's at 87, and some of the analysts are talking 86, 86.6. So, it's debatable where they get it, but should the prospects start looking good for them to have a big crop, our prices are going to be struggling big time. And on top of it, the one thing that's been our ray of sunshine and was also part of the reason we rallied this last spring and late winter was because Argentina's farmers are holders of beans. And they haven't changed that habit just yet because the high rate of inflation and the policies, government taxation policies, they're still not letting go of those beans unless they need money or have to buy something. Then they take them to town. But other than that, because of that, the crushers in Argentina this past season ran anywhere from 64 to 74% of capacity. And that pushed the global demand to the U.S. for crush. And we aren't seeing that change just yet.
Okay. So there's some risk on the table with the soybean crops as we head into 2015.
I would really keep an eye on Argentine farmers for a change in habit. If they start to change in habit, there's another thorn in your side.
All right. Well, now let's jump over to the protein markets as we look at cattle. And that's been a high-flying market all summer. Last week we saw it break, continued the slide this week. Walt, what are you hearing on the ground in the fat cattle market? Is there still move to the downside?
There is a real possibility that we could see another depreciation of possibly $3 to $5 a hundred. On the other hand, with the federal inspected slaughter hovering around 114 to 117,000 cattle a day, that's minimal compared to the consumer demand that we have kind of unexpectedly realized at the price that fat cattle are bringing. Most of the analytical community were predicting last winter that if fat cattle got over $1.30, the consumer was going to go home, they were going to buy chicken, or they were going to buy some extra pork. But the fact remained they were going to refuse to pay the price for beef. That hasn't been the case. The packer, in fact, has had a dickens of a time keeping a high enough inventory of beef to keep the beef channel well supplied with good, high-quality beef. The area that might have been a little bit restricted, and that has been a surprise, is hamburger. The lady from Wisconsin here with the good dairy cows that come in from the packing area, they have not had the appreciation that some of us thought would happen due to consumers backing off of luxury cut beef. So as a result of that, hamburger hasn't had the phenomenal demand factor than we thought. That'd be particularly 93% or something in that regard on the hamburger market. Or Mike, I'm sorry.
It's all right. So that's so we do have the risk out there. The consumer has been buying. Elaine, what have you seen from consumer preference here as we look to beef? Do you anticipate the demand to stay relatively strong here going forward?
Yes, the demand has proven to be remarkably inelastic. If we had asked this question 5 years ago, we would have definitely expected demand to be elastic and for consumers to make different choices. But people who are willing to pay for especially the prime cuts of beef will pay that price. And you mentioned the possible substitutions for pork. Because pork prices have also had, a very bullish year this year, I think that may have helped keep the demand strong for beef, although we are losing some demand in the export sector, I think, or it's slowing and it's challenged.
Okay. And now, Walt, as we take a look over at the feeder cattle side, fat cattle were down a little bit over $2 this week. Feeder cattle were up just about 38 cents on the board. Are we seeing a similar stabilization trend out in the field? Cash feeders staying strong?
There hasn't been enough of an adjustment in feeder cattle to what a shotgun on the cash. Now, in regard to the mercantile and the traders back there, who knows what they're going to do tomorrow morning? They don't even know what they had for breakfast. And the fact remains, they are driving the attitude of it's a bearish market, we lose $10 100, we're going to lose more, etc. if Russia doesn't step up to the plate, and so forth. I don't subscribe to that. We've got the lowest feeder cattle inventory, well, at least since the 1950s, and maybe beyond. It may be in history. But the fact remains that inventory is anywhere in the area of 2 or 3 or 4 or 5, and there's a lot of debate on that, short of where our needs are in regard to the feedlot capacity and the packer capacity and the inventory that we need to supply them. So I subject that we will see feeder cattle within the current range. I'm not saying a 450-pound calf, Mark, will bring 350, 100 weight like you're waiting for a higher market on. But the fact remains, those markets are phenomenal. They are historic high. No one in this room has ever seen a market at this level, myself included. And the fact remains, if we took a $10 hickey, if we took a $20 hickey, who cares? They're still making $400 and $500 and $600 and $700 a head. Now, how much damn money do you want to make?
I think all of it is the answer to that question, Walt. Now, you brought up Russia, and Virgil, I'd like to talk to you a little bit. The Russia cutting off trade with some of the folks who have put sanctions on it, it do you anticipate that having much impact as we look at the pork production here in the next year, or even in the shorter term? Is there going to be much of an impact there?
I don't think it'll be significant, Mike. Our best pork importers, Japan, Mexico, Canada, and South Korea, have actually bought more pork to date than they did a year ago. So I don't think that's a major factor. But as Walt or one of the analysts mentioned, when you're at life of forever highs, it's the sum of these little things that create
That's the truth.
ripples in the market, and we've just currently gone through a pretty significant one. Mike, I thought of something, and this is something I'm just going to inject here, because I had the opportunity just recently to visit with a group of Argentinian farmers. And what was spoken to is correct and accurate, but there are any number of U.S. multinationals now positioned throughout Argentina that have offered a contract unique to that country. It's kind of like a delayed price contract here, where they are acquiring possession of a specific commodity and giving that person a contract, a two-party contract that will allow them to price at a specific time in the future. So that grain is moving into commercial channels, and it's coming out of that country in the form of soybean meal and soybean oil.
All right. Well, thank you so much. Thanks to Virgil, Sue, Elaine, and Walt. Appreciate you being here. That wraps up this special edition of Market to Market here at the Iowa State Fair. I want to thank all of our analysts and our live audience for joining us to kick off the 40th season of Market to Market. We'll continue our discussion and answer some questions from the audience here at the Iowa State Fair in our Market Plus segment online. You'll also find audio podcasts and streaming video of our program, as well as links to our Twitter feed, Facebook page, and the rest of our social media outlets. Be sure to join us next week when we'll feature more moments from the Market to Market archives and examine the outlook for prices heading into harvest. Until then, thanks for watching. I'm Mike Pearson. Have a great week, everybody.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by Grinnell Mutual. You think differently about a customer when you stand in the middle of his dreams. We work to make sure you get covered right. Grinnell Mutual, a policy of working together. Information on finding an agent near you is available at grinnellmutual.com. And by Sukup Manufacturing Company, offering a full line of grain drying and storage equipment and steel buildings. Sukup Manufacturing is on a mission to protect and preserve your crop and the tools that produce it.